Hello traders, this is Fawad Razak, market analyst for City Index. Today is the 29th of November 2023. So the markets are looking interesting. Everything is being driven once again by falling bond yields because of the weakness in inflation data we've seen around the world, not just in the US, but also some dovish comments from central bank officials in the US. Today, however, we had some stronger than expected data, namely GDP, which came in at 5.2% quarter over quarter, which was a touch stronger than expected compared to the initial estimate of 4.9%. The key data release this week is going to be the core PCE price index, which is the Fed's favorite inflation measure. This is expected to have risen by 0.2% month over month. A reading below that could further boost the peak interest rates narrative. So the Nasdaq created a new high for the year earlier today. It is coming off its earlier highs after testing resistance and liquidity above last week's high of 16,122 or thereabouts. So let's see how today's candle will close. If it comes back all the way to the opening level and goes below it, then it will have created a bearish looking shooting star candle or the like. However, it is testing support here at around 16,032, the high from the previous day. So that level needs to hold now to maintain the bullish trend. So despite the US indices rallying, the FTSE has really struggled in the last several weeks. In fact, it's been struggling since the summer months, really hasn't gone anywhere fast. And this is in part because of the strengthening of the pound, the weakness in energy stocks with crude oil prices falling. I'll come back to the crude oil prices in a minute, but there are also concerns about the UK economy not doing very well at the moment. All of these concerns are keeping bullish investors away from UK stocks at the moment. But we have seen the FTSE bounce around this 7,250 area, 7,300 key long-term support zone several times in the past several months, keeping the long-term bullish trend intact. So it's not exactly selling off either, is what I'm trying to get at. So I would be looking for a bullish pattern to emerge at around current levels before turning positive on the FTSE. Specifically this level right here at around 7,450, which was support and resistance in recent days. We need to go back above this level to turn positive once again on the FTSE. I mentioned crude oil prices earlier because we have the OPEC meeting taking place on Thursday, and earlier oil prices were up, moving above the 200-day moving average, but they've since turned lower once again, finding resistance from around this shaded region, which was previously support and resistance. So this is the key area that oil will need to go back above. This is the Brent contract, by the way, before we turn positive on oil prices, because as you can see, crude oil has been making lower lows and lower highs of late. At the time of this recording, crude oil is testing a potential support area, as I will show you right now. This level right here at 80.75, which was the point of origin of the breakout on this hourly chart. As you can see, it's now retesting that level from above, so there is a possibility that it could bounce back by the time I post this on social media. We also have the 200-hour moving average coming into play right here as well. Okay, so keep that level there as we move back to the daily chart. In terms of precious metals, well, silver is looking really strong. It's now above 25. Gold has turned lower on the session, however, but the trend is still bullish, as indicated, for example, by these moving averages. This being the 21-day exponential. This is the 200-day moving average. Price has also created a higher high above its previous high of 2010 area. That level is going to be the key support to watch should we get a decent pullback in the next couple of days. For as long as supports get defended, the path of least resistance remains to the upside. Now, for more insights, make sure to check out the news and analysis section at cityindex.com. I will see you in the next video. Take care.